Welcome back, ladies and gentlemen, to Forex Shorts Podcast.
Yeah.
We're diving deep today into a topic that I think is absolutely crucial for anyone who's just starting out on their trading journey.
Yeah.
We really aim to add some real value here, try and have a positive impact.
Absolutely.
And I think this deep dive is really going to do that.
For sure.
We're looking at this piece called 4 Things I Wish I Knew When I Started Trading.
Right.
And I think, in a way, this is like the shortcut.
Yeah.
It's like, if you can tap into someone else's experience and avoid some of the mistakes,
Yeah.
it can really help you kind of hit the ground running.
For sure.
So, without further ado,
Yeah, let's get into it.
let's just jump straight into point number 1.
Okay.
Which is this idea of not trading small initially.
Yeah.
And, the author starts out with that pretty alarming statistic that we've probably all heard, right?
Oh, yeah.
90% of traders lose 90% of their money in the first 90 days.
Yeah. It's one of those things that you hear, quite often when you're starting out.
Yeah.
But the author is sharing his mistakes so that we can avoid those pitfalls.
Right. And I think it's interesting because when you're starting out, there's so much excitement,
For sure.
right?
Mm-hmm.
There's the potential for quick profits.
Yeah.
You're looking at those charts, you're seeing those big moves.
Yeah.
And I think it's tempting to jump in with both feet,
It's very tempting.
right? Put big positions on,
Yeah.
try and make a lot of money quickly.
Yeah, the allure of the big win
Yeah.
is definitely there. But
Yeah.
like you said, it's important to think about this in the same way as learning any new skill.
Yeah.
It's like learning a musical instrument or a new sport.
Yeah.
You're not going to be a professional overnight.
Right. And I think the key thing here and what the article really stresses
Yeah.
is that losing in the beginning is, almost inevitable.
It's part of the process.
Yep.
You're going to make mistakes. You're going to have losing trades.
Yeah.
And that's okay.
Yeah.
What's important is to minimize those losses
Yeah.
so that you can learn from them.
Yeah. And the idea is to develop a solid trading system,
Absolutely.
right? Something that has an edge that you can then execute with discipline.
Yeah, so you want to be focusing on that system
Right.
rather than the outcome
Yeah.
of any individual trade.
Right. And it's that whole idea of, growing slowly.
For sure.
Right.
Slow and steady wins the race.
Yeah, absolutely. So let's move on to point number 2,
Okay.
which is this idea of not understanding that trading is a game of probability
Right.
and the absolute importance of keeping those losses small.
Yeah, this is a really important point because it's kind of a mind shift
Yeah.
you need to make when
Yeah.
you're starting out.
Yeah.
As the author points out, you're not going to be right all the time.
Yeah.
In fact, you're going to be wrong a lot of the time.
Right. And I think this is something that a lot of new traders,
Struggle with, right?
yeah, they think that they need to be right
Yeah.
to make money,
Yeah.
but that's not the case.
No, absolutely not.
It's about managing your losses
Yeah.
when you're wrong.
And the article gives a couple of really great examples of why that is.
Yeah.
And I think it's really helpful to see it in those terms.
Yeah. It's a good way to illustrate the point.
Yeah. So we've got these two traders, right? Trader X and Trader Y.
Right.
Trader X wins 8 out of 10 trades.
Wow. That's a high win rate.
That's amazing, right? 20% gain each time.
So they're winning a lot.
They're killing it, right?
Yeah.
But
But there's always a but.
there's a big but, right?
Yeah.
They also lose 20% on their losing trades.
Ooh.
So what's the outcome?
Well, over 10 trades, they're going to be down quite a bit.
Yeah, it's like a BLOWUP, right?
Yeah, because those losses are so big.
Yeah, they completely wipe out
Yeah.
all of those wins.
It's like 2 steps forward,
Yeah.
8 steps back.
Yeah.
Yeah, exactly. Now, let's look at Trader Y.
Okay.
So Trader Y only wins 5 out of 10 trades.
Okay, so 50% win rate.
Yeah, so not as impressive on the surface.
Right.
Not as glamorous.
Yeah. But they have a 4% gain on their winning trades.
Okay.
And crucially, a 2% loss on their losing trades.
Right.
What happens to them?
They're going to be up.
They're up 8%. So what does that tell us?
It tells us that it's not just about winning.
Right.
It's about managing your risk.
Yeah. And it really highlights that key principle, right?
For sure.
Let your winners run
Sure.
and cut your losses short.
Absolutely.
It's such a simple concept, but so hard
So hard to do.
to actually put into practice.
Emotionally, it's tough.
Yeah, absolutely. So let's move on to mistake number 3, which is not understanding risk management.
Yes.
And the author really emphasizes this.
Rightly so.
Right. This is crucial for consistent profitability.
Risk management is everything in
Yeah.
trading. And they've got this great quote in here
Oh, yeah?
from Ed Secoda,
Yeah.
who says, The key to long-term survival and prosperity has a lot to do with the money management techniques incorporated into the technical system.
Powerful words.
Yeah. And it just really hammers home that point, right?
Yeah, you can have the best trading system
Yeah.
in the world.
Yeah.
But if you don't manage your risk,
Yeah.
you're going to blow up.
Yeah, you're going to blow up your account.
Yeah, it's just a matter of time.
Yeah. And so they break down risk management into a few key areas.
Okay.
Stop loss orders, position sizing, and trailing stops.
Right.
And, the main goal here is to protect your capital and stay in the game.
Stay in the game. That's the key.
So let's talk about stop loss orders first.
Okay.
What are they?
So a stop loss order is basically an order that you place with your broker that automatically closes out your trade at a certain price level.
Right. So it's like your safety net.
Exactly. It's there to protect you from losing too much money.
And the key thing here is it's predetermined.
Yeah. You decide before you enter the trade what your maximum loss is going to be.
And the article talks about where to place these stop loss orders.
Right. Because it's not just a random thing.
Right.
You need to be strategic about it.
Yeah. And the author says that you should place them beyond the market structure.
Yeah. Beyond support and resistance levels.
Right. And this is to avoid those stop hunts.
Yes, the dreaded stop hunt.
So what's a stop hunt?
So a stop hunt is basically where the big players in the market, the institutions, the hedge funds, they know where most traders are placing their stop loss orders.
Yeah.
And they'll sometimes push the price down to those levels just to trigger those stops.
Right. So they can kind of collect.
Yeah, they're collecting liquidity.
All those orders.
Yeah, they're taking advantage of the herd mentality.
Yeah. And then once they've done that, they can reverse the price.
Exactly. Yeah. They move the market in the direction they want it to go.
So how do you avoid that?
Well, like the author says, you need to place your stop loss orders beyond those obvious levels where most traders are placing theirs.
So give yourself a little bit of...
Yeah, a little bit of breathing room.
Yeah, breathing room.
Yeah.
Okay, that makes a lot of sense.
Yeah.
So then we move on to position sizing.
Right.
And this is all about how much of your account you're risking on any given trade.
Exactly. It's about controlling your risk.
Yeah, absolutely. And they give a really nice 4-step process.
Yeah, it's a good frame.
For figuring this out. So step 1 is to figure out what percentage of your account you're willing to risk.
Yeah, so what's your risk tolerance?
Yeah, per trade. And they recommend starting with like 2%?
Yeah, 2% is a good starting point.
As a maximum.
Yeah.
Yeah.
But it really depends on your individual risk tolerance.
Yeah, absolutely. Then step 2 is to divide that maximum risk amount by the average number of trades you take per day.
Right. So you're figuring out your risk per trade.
Right. So if you've got a $100,000 account and you're willing to risk 2%, that's $2,000.
Yeah.
Right.
Yeah.
And if you take 2 trades per day, then you're risking $1,000 per trade.
Right.
Okay, step 3 is to calculate the risk on the trade.
Right.
And how do you do that?
So you measure the distance between your entry price and your stop loss order.
Right. So that's like the size.
The size in your stop loss.
Of your potential loss.
Yeah.
Okay, and then finally step 4 is to divide the maximum risk amount per trade by the risk on the trade to determine your maximum position size.
Yeah, so you're basically figuring out how many shares or lots you can trade.
Yeah. So in our example, right?
Yeah.
If the distance between our entry and our stop loss is $5, and we're risking $1,000 per trade, then our maximum position size is 200 shares.
Right.
Right.
Yeah.
And it's interesting how the larger the stop loss, the smaller the position size.
Exactly. Yeah. The further away your stop loss is, the fewer shares or lots you can trade.
Yeah. And they also talk about the importance of having daily and weekly stops.
Yeah, these are like your safety nets for your overall account.
Right. So it's like, okay, I'm willing to lose, say, 5% of my account in a day or 10% in a week.
Yeah.
And if I hit that, I'm done.
You're done for the day or for the week.
Yeah.
You walk away.
Yeah. Yeah, absolutely. Okay, let's move on to the final mistake, which is focusing on profit instead of the process.
Yes, this is a big one.
Yeah. And I think this is where a lot of new traders get caught up, right?
Yeah, they're focused on the money rather than the process of making the money.
Right. And the author makes a really good point here.
What's that?
They say, becoming a good trader is more about the trading process and discipline than it is about individual trade outcomes.
Yeah, it's about consistency. Right. It's about having a system that you follow even when it's hard.
Right. And they also talk about the importance of developing your own trading edge.
Yeah, this is where a lot of traders get lost. Yeah. They're looking for that holy grail, that one perfect strategy that's going to make them millions.
And they jump from one thing to the next.
Exactly.
Right.
They're chasing shiny objects.
Yeah. They're always looking for the next best thing.
Yeah.
But the reality is, there is no holy grail.
There's no magic bullet.
Right. And the author says that even profitable strategies will have losing periods.
Absolutely.
Right.
You're going to have drawdowns.
Yeah.
You're going to have losing streaks. It's part of the game.
Yeah. And that's why it's so important to have that positive risk reward.
Exactly.
Right. Because if you can make more on your winners than you lose on your losers, you're going to be okay.
You're going to come out ahead.
Yeah. Even if you don't have a high win rate.
Yeah.
And they give that great example.
Oh, yeah.
Of the 10 trades with the 2.1 risk reward.
Right.
Where you only win 2.
Yeah.
But you still come out ahead.
Yeah, because those 2 wins are big enough to offset the 8 losses.
Exactly. So what does it mean to have an edge in trading?
So an edge is basically anything that gives you an advantage in the markets over time.
Right. So it could be a profitable trading system, a discretionary rule-based strategy, a positive risk-reward ratio, whatever it is.
Yeah.
It's something that tilts the odds.
Tilts the odds in your favor.
Yeah. Right.
So over time, you're going to have more winning trades than losing trades.
Right. So I think that's a really good overview.
Yeah, it's a lot to take in.
Of those 4 crucial mistakes that new traders often make.
Yeah.
And I think the key takeaways here are,
what are they?
Start small.
Yeah.
Understand that trading is a game of probability. Focus on risk management.
Absolutely.
And develop a solid trading process.
Yeah. Those are the foundations of successful trading.
Absolutely.
Yeah.
So if you can implement those things,
you're
going to be well on your way.
You're going to be ahead of the game.
Yeah, absolutely. All right. Well, I think that's all we've got time for today.
Okay.
Please subscribe. Leave a comment on what you learned from the video.
Yeah, we'd love to hear from you.
Like this content, and thank you for listening to the Forex Shorts podcasts.
Peace out.